According to supply managers in the 9 Mid-America states, how is the economy performing?
Our survey of supply managers in the 9 Mid-America states for December was strong. It climbed, the overall reading climbed to 64.6 from November's healthy 60.2. Of course, any reading above 50 is growth positive, so things are looking very good. However, approximately one out of three supply managers expect supply chain bottlenecks to get worse in the first half of 2022. So that's a real concern expressed by the supply managers in this December survey. And more than half of the supply managers reported that the Omicron variant was slowing delivery. So that's another concern out there. And I think wholesale inflationary pressures are still too high, but they cooled a bit from November. And here I'll bring up a graph showing the Mid-America profile of the Mid-America region over the last 18 months compared to the U.S. number, which had come out later on this morning. And both are reading in similar ranges. Both are very strong. So the manufacturing sector in the 9 states and the U.S. As well, showing some real positive growth moving ahead into 2022.
What were the hiring trends?
The December reading was down a bit from November's very strong 61.1 to December's reading of 59.3. And the regional employment, even with the strong readings, regional employment is still down about 2.6% from pre-COVID-19 levels. The U.S. employment is likewise down by about 2.6% from pre-pandemic levels. I'm speaking of February of 2020. And all 9 states are recording employment levels below pre-pandemic levels. Nebraska is the closest. Nebraska is almost back to pre-pandemic levels. In terms of GDP, however, all the states and the region and the nation are well above pre-pandemic levels of the overall economy in terms of GDP.
What inflation trends are you noticing?
Inflation was down and fairly significantly, down to 82.7 from November's 92.9. Now that's still indicating significant inflationary pressures, but I expect the inflation rate to cool in the first quarter of 2022. Now, when I say cooling, it's still going to be well above what the Federal Reserve considers its target rate. So we're still seeing a lot of inflationary pressures. About one half of reported deliveries slowed from the November rate. So compared to two-thirds for November. In other words, one half reported slower deliveries in December, but again, that compares to 2/3 in November. Imports and exports were strong for December. Estimate that exports are up by about 20 to 25% in Q4 of 2021 compared to the same quarter for 2020. So trade's looking very good right now. We're seeing exports and imports pretty strong.
What is the economic outlook?
The outlook, according to our surveys and my assessment of those surveys, inflation will remain very high, but cool slightly in the first quarter of 2022. Economic growth will slow, with employment gains slowing for the first quarter. Short-term interest rates will begin rising, and pretty quickly, I think. I expect the prime interest rate, which is now 3.25%, to rise to 4% by mid-year. So that's a 0.75% increase, 0.75 of 1 percentage point increase for the first half of 2022. The outlook is for long-term interest rates, including mortgage rates, will increase only slightly in the first half of 2022. Those will remain very competitive. Supply chain bottlenecks and labor shortages and inflation will be the chief economic impediments in the first half of 2022. So that supply chain bottlenecks, labor shortages, and inflation will continue to be the chief economic impediments in the first half of 2022. The viewers and listeners out there must keep an eye on the yield on the 10-year U.S. Treasury bond in the weeks and months ahead. That's now at about 1.5%. Obviously, if you track out the rate of inflation, which is 6.8%, you get a negative return there. So that watch for that yield to go up. And it could go up sharply, but it has remained in this range for quite some time. But should it rise up to, say, approach 2 percentage points, that would be something to keep an eye on. We've benefited from significant growth or purchases by investors, the global investors, as they seek higher yields. And the U.S. is the best place, even though it's, I'll just call it the cleanest shirt in the dirty laundry. 1.5% is just not enough of a return considering inflation, what we're getting. I think the inflation, Chairman Powell, Jay Powell, the head of the Federal Reserve, indicated that this inflationary pressures were transitory early on. There's a lot of permanent inflation in there. I expect inflation, when it does come down in the first quarter and the first half of 2022, we're still going to be stuck with inflation well above the 2% target. We're talking about probably 4 to 5%, and as opposed to current 6 to 7%. Listen to the federal governors, the Federal Reserve governors, the governors, and what the presidents of the Federal Reserve, what they say in their meetings when they talk to the press over the next couple of weeks and the next couple of months. Listen carefully to any warnings that they issue. The Open Market Committee meeting, that's the rate setting committee of the Federal Reserve, meets again on January the 25th and 26th. On the 26th, they will announce whether there's a rate hike or not. There could be a rate hike on January the 26th, and it could be, so listen to the Federal Reserve governors and the presidents of the Federal Reserve banks to let us know what's going to happen on the 26th of January. Finally, keep an eye on the post-Olympic China. China's growth has been coming down dramatically. I think after the Winter Olympics in China, watch out for the tiger, the Chinese tiger, the CCP, the Chinese Communist Party, and what happens there as they get more aggressive, perhaps in terms of exports, in terms of what happens in Taiwan. And that's it for our December survey of supply managers in the 9-state region. So all in all, it was a good survey. Things are looking better. We'll wait and see what happens in January with our January report, which will come out on the first business day of February. Until then, may your economic cup runneth over, and thank you.